Okay, welcome to the deep dive. Today we're tackling a stack of sources that might seem like they belong in completely different worlds.
That's right. On one hand, we've got excerpts from the 2023 Goldman Sachs Shareholder Letter. Highly formal, big global bank stuff. Strategy, performance, the big picture.
And then, totally different, we have this list of over 60 podcast interview questions. These are much more about, well, personal stories, advice, individual journeys.
Yeah, all sorts of fields covered there.
So our mission today is to dig into each one, pull out the interesting bits, the key insights.
And then see what happens when we kind of look at them together. What connections pop up or contrasts.
Exactly. And just to be clear, this isn't really a deep financial analysis of Goldman or a how-to on podcasting.
No, it's more about exploring the information in these specific texts. What do they tell us? Why might it matter to you?
Right. So let's jump in. Part one, the Goldman Sachs Shareholder Letter.
Okay.
The opening message really sets the scene. They frame 2023 as a year of execution.
Yeah, that phrase jumps out. Taking swift, decisive action, refocusing strategy. Sounds like they felt the need to tighten things up.
And they reinforce their core identity pretty strongly.
Oh, yeah. A preeminent global investment bank, serving the most important players, basically.
And this identity is built around two core businesses.
That's how they structure it. Global banking and markets and asset and wealth management. Those are the engines.
Okay. And looking forward into 2024, they lay out three strategic objectives.
Right. First is harnessing one Goldman Sachs. Sounds like internal synergy for clients.
The second.
Running world-class, differentiated, and durable businesses. Standard corporate goal, but emphasizes quality and resilience.
And third, investing to operate at scale. So efficiency, growth capacity.
Exactly. And they don't just state these things, they back them up with performance highlights, especially for global banking and markets.
Like what?
Well, number one in advisory net revenues. For the 21st year in a row, apparently.
Oh, okay. That's consistent.
And also number one in equity and equity-related underwriting. Number two in high-yield debt volumes. Strong positions.
And what about their core trading areas? Equities, FICC.
Right, FICC being fixed income, currency, and commodities. They state they were number one in equities, top three in FICC.
And FICC had a particularly good year.
Second highest net revenue since 2010, they say.
Yeah.
So yeah, these traditional strengths are still, very strong.
And that one Goldman Sachs objective, did they measure its impact?
They try to. They claim it's increased their wallet share, the slice of client business they get, by nearly 350 basis points since 2019 in global banking and markets.
3.5% increase? That sounds pretty significant across their client base.
It does. It suggests that integration effort is paying off in terms of winning more business from their biggest clients.
They mentioned specific client numbers.
Yeah, covering 117 of the top 150 clients
Yeah.
in FICC and equities now, up from 77 back in 2019. So deeper penetration there.
And I remember seeing something about record financing revenues.
Almost $8 billion in 2023 across FICC and equities. And they highlight a 15% compound annual growth rate since 2019.
So that part of the business is growing fast.
Seems like it. Providing financing solutions is clearly a focus area with strong results.
Okay, shifting to the other main pillar, asset and wealth management. What's the story there?
The focus is on growing more durable revenues. Think fees, things less tied to market swings.
Right, more predictable income streams.
Exactly. And they hit new records for management fees and also for private banking and lending revenues.
And they mentioned alternatives fundraising too, right? Private equity, that sort of thing.
Big time. They raised over $250 billion since 2019. They actually beat their revised target of $225 billion a year early.
And the original target was even lower.
Yeah, $150 billion. So
Yeah.
Huge success there. It shows they're really executing on expanding asset management and getting those steadier fees. They also mentioned reducing historical principal investments, which fits that strategy.
Okay, so performance seems solid according to the letter. What about shareholder returns?
They paint a strong picture there, too. Book value per share up about 50% over 5 years.
And the stock price.
Up around 130% over the same 5 years, which they contrast with a peer average of about 60%. This is all as of end of 2023, mind you.
And dividends.
Quarterly dividend more than tripled over 5 years. So the message is we're delivering value back to the owners.
Makes sense. So building on that 2023 execution, what are the key focus areas for 2024? They listed quite a few.
Yeah, 8 of them. Things like enhancing client experience, driving investment performance, growing those durable revenues we mentioned.
Investing in people and culture, optimizing resources.
Right, achieving agility, scale, efficiency, engineering excellence, and importantly, maintaining focus on risk management.
And these all feed into their desired outcomes.
That's the idea. Trusted advisor, employer of choice, hitting mid-teens returns through the cycle, and strong total shareholder return. It connects the dots from action to result.
Okay, let's talk about the environment they're operating in. They acknowledge things were tough in some areas?
Definitely. They explicitly say they stand to benefit as capital markets rebound. That's a nod to M&A activity being at a 10-year low in 2023, so potential upside there.
What's their take on the broader economy as presented in the letter?
They see the U.S. economy as surprisingly resilient, despite fast rate hikes. Markets are pricing in cuts.
But Goldman adds a note of caution.
Yeah, that inflation might be stickier than expected. The big takeaway they emphasize is the cost of capital being materially higher now.
And that higher cost has real impacts on clients.
For sure. They mentioned startups being laser-focused on talent, capital access, liquidity. Higher rates hit younger companies harder.
And for bigger multinational CEOs, what are their concerns?
The letter points to bigger structural forces, inflation, geopolitics, and generative AI.
Ah, AI comes up.
And also, these CEOs are apparently seeing tougher conditions for consumers, especially at the lower income levels.
Okay, let's dig into that generative AI point a bit more. How do they view it?
As disruptive, definitely. They cite potential for big productivity gains, like 20–45% for developers.
But with caveats.
Oh yeah, they acknowledge adoption lags, use cases are still early, data security is huge, regulation, ethics, lots of hurdles.
Still, they see potential.
Significant expansion possible, they say. As the tech matures and enterprise-safe systems develop, it's a major force to watch and invest in carefully.
And geopolitics, another major force mentioned.
Yes. Ukraine, the Middle East, China listed as flashpoints. CEOs are debating supply chain shifts regarding China.
But economies are still tangled up.
Deeply intertwined, yeah. An interesting observation they include is that China's economic position appears to have peaked, for now at least.
But its long-term trajectory still matters globally.
Hugely important for growth and stability worldwide. It shows the complex global map they have to navigate.
Okay, now, there's a pretty significant section on the regulatory landscape. Basel III.
Yes, this is clearly a hot-button issue for them. They dedicate quite a bit of space to the proposed U.S. reforms on bank capital requirements.
And they're not fans of the proposal.
Not as written, no. They argue strongly that it would hurt economic activity without actually making the system safer. They talk about unintended consequences.
What kind of consequences?
Higher borrowing costs for clients manufacturers, energy firms, even retirement savers. They give an example with pension funds facing higher costs for transactions that are meant to boost returns.
So potentially hitting consumers indirectly too.
That's the argument. They also raise concerns about U.S. competitiveness versus European banks, who they say got more flexible rules.
But making it harder for U.S. banks to operate globally.
Potentially, yeah. And another big point is the risk of pushing lending into the less regulated shadow banking sector.
Which could build up risks elsewhere and reduce liquidity in a crisis.
That's their fear. They mention they're actively advocating for changes and site analysis showing overwhelming concern in public comments. Over 97% apparently expressed issues.
So their stance is pretty clear.
Very. They say a sound financial system is vital, but this proposal needs revision because it doesn't serve the broader public interest. It's framed as a major economic issue.
Okay. Shifting focus a bit within the letter, they talk quite a bit about culture.
They do. They call it their biggest competitive advantage, which is an interesting framing.
Culture as strategy, almost.
Not just, a soft HR topic. They ground it in their core values: partnership, client service, integrity, excellence. Central to who they are and why they succeed, they argue.
What aspects of the culture do they highlight?
Collaboration, teamwork, trust, respect, free flow of ideas, creating belonging, and also this idea of an apprenticeship culture.
Meaning?
Passing down not just skills, but values. Prioritizing long-term interest over short-term gains demonstrated through actions. Resisting that short-term thinking.
So it's about embedding the values.
Yeah, they really emphasize that culture fuels success and needs constant investment. It's positioned as fundamental.
And this ties into their broader business principles.
Exactly. Those core values derive from a longer list of principles. Things like client interests first, assets are people, capital reputation, shareholder returns, quality, creativity, merit, diversity, teamwork, integrity. It's a comprehensive list.
And it all rolls up into a purpose statement.
To be the world's most exceptional financial institution, united by our shared values. That's the vision they state.
Okay, so that's quite a journey through the Goldman Sachs letter. We've covered 2023 execution, 2024 strategy, the market environment, the regulatory fight, the focus on culture. A very structured institutional view.
Definitely. High level, strategic, performance driven. Now let's completely switch gears and look at that other document, the list of 60 plus podcast interview questions.
Yeah, it feels like stepping into a totally different room, doesn't it?
Absolutely. This isn't a report. It's a toolkit for drawing out personal stories, practical tips, individual viewpoints.
And the categories reflect that. General, personal growth, business and entrepreneurship, finance, creativity, lifestyle, and wellness. Much broader, more personal scope.
And just look at the kinds of questions asked. What do they aim to uncover?
Well, it's all about personal experience, right? Lessons learned the hard way, strategies that work for individuals, challenges they faced, what keeps them going.
Their routines, their values, actual advice they'd give, how they see trends, how they handle risk on a personal level. It's digging into the human narrative.
Give us some examples.
Okay, like, what's the best advice you've ever received? Or, how do you stay motivated during tough times? Completely different feel from the shareholder letter's tone.
Right. Or what's your biggest challenge as an entrepreneur versus, Goldman navigating global macro forces?
Exactly. Or, how do you start investing with little money
Yeah.
versus Goldman managing billions in alternative assets? Different worlds.
You also see questions like, how do you overcome creative blocks? Or how do you prioritize mental health?
Yeah, these are really about the individual's journey, the struggles and tactics involved in building a life or a career or a project. It's grounded in lived experience, practical tips, personal definitions of success.
Which is a stark contrast to the institutional focus we saw. Market share, financial metrics, executing large-scale strategy.
Totally different lenses. So what happens when we put these two side by side? It really highlights different ways of understanding the world, doesn't it?
It really does. One is this top-down systemic view, a huge institution navigating global forces, regulations, market dynamics, billions of dollars.
And the other is bottom up. Individual stories, personal agency, practical challenges, daily life stuff. How do I navigate my world?
They represent such different ways of thinking about success and value and dealing with complexity.
Yeah, the letter is about succeeding in a structured, data-heavy institutional world. The questions are about succeeding in the messiness of human experience, building things often with far fewer resources.
But are there overlaps or contrasts that tell us something interesting? Let's think about finance and investing.
Okay. The letter talks complex capital markets, high-yield debt, institutional asset management, big plumbing.
While the questions ask about starting small, personal finance, both involve money, but the scale and perspective are just worlds apart.
It really shows how finance means totally different things depending on who you are and where you sit.
What about people and culture? The letter talks about investing in people and culture for competitive advantage, teamwork, collaboration, apprenticeship for business success.
Right, the corporate view on human capital. Then the podcast questions hit personal growth, motivation, mental health, overcoming individual struggles.
So is there a shared idea there that things like resilience, learning, well-being, tackling challenges, they're crucial whether you're a giant bank or just, one person?
It's just framed differently. Corporate imperative versus personal quest for self-improvement and navigating life.
And handling challenges. The letter talks about navigating a dynamic environment, macro shifts, geopolitics, regulation, big external forces.
While the podcast questions ask individuals, how do you handle tough times? What's your biggest hurdle? How do you bounce back? More internal or immediate obstacles.
Obstacles are clearly everywhere, just different kinds. But maybe the underlying process, identifying the challenge, planning, acting, adapting, maybe that core process isn't so different.
That's an interesting thought. The scale and context change dramatically, but maybe the fundamental human response to challenge has similarities.
It also makes you think about defining success and value. In the letter, success is market share, revenue, returns, strategic execution, global scale.
Very metrics-driven. Whereas in the questions, success seems more personal. Overcoming doubt, building a small business, finding fulfillment, creating something meaningful, maybe financial independence on a personal scale.
Yeah, the value created by the bank is framed through transactions, market leadership. The value explored in the interviews might be wisdom shared, inspiration, community, different kinds of value.
So you have these two documents, the formal report from a financial giant, the prompt list for personal conversations, offering these really different but sometimes subtly connected views.
Views on strategy, execution, navigating change, facing challenges, defining success.
And the importance of the human element, whether you call it strategic culture or individual motivation and well-being.
It definitely shows that understanding the world requires looking through multiple lenses. Insight comes from structured analysis and from individual stories.
Yeah, you need both the big picture data and the ground level experience for a fuller understanding. Both are valid, both are necessary.
Exactly. So we've dug into what a major institution like Goldman Sachs communicates about its strategy and the world in its shareholder letter. Specifics on performance, environment, culture.
And we've contrasted that with the kinds of questions used to explore personal and professional journeys, the struggles, the advice, the motivations across so many different fields.
It's a good reminder that whether you're managing billions or just managing your own life and career.
Themes like planning, executing, adapting, overcoming challenges, investing in the future, and the role of people. They show up everywhere, just expressed and experienced very differently.
So here's a final thought for you, drawing from both sources. How do the big challenges of navigating a complex global economy, like those outlined in the Goldman letter,
Compared to the personal struggles and practical advice people seek when building their own life, career, or projects, like those prompted by the podcast questions.
where do you see those worlds intersecting in your own experience, or where do they feel most sharply different?
Think about the scale, the language, the metrics for success. But maybe also think about that shared human drive to adapt, to execute, to create value, even when things feel uncertain.
Thanks for joining us for this deep dive.